it expects domestic growth to stay resilient. An Indian consumer services platform, Urban Company's IPO getting snapped up within hours of its launch, with a lot of interest from retail investors. Good morning, and we start off once again with a quick look at how Asian markets are shaping up this Thursday morning. It's looking mixed to the upside so far in today's session. We are seeing that the Nikkei 225 has lifted above 44,000 points in so far once again in today's session, indicating that there's a lot of optimism once again out in Tokyo. Also some optimism in South Korea with all the talk of value-up programs to try and boost valuations there. They're up by about 0.5%. However, a bit mixed once again across greater Chinese markets. And while the Hang Seng is down by about 0.75% today at 26,000 points, we are seeing the Shanghai Composite getting a little bit of a boost today, up by about 0.33%. It's a modest gain, but a welcome gain nonetheless after we've seen some turbulence hit the sentiment actually for mainland traders out in Shanghai and across mainland China. The Indian markets are also set to come online in about 45 minutes, and we want to take a look at what Gift Nifty futures are indicating today. And we're seeing that, once again, it is forecasting a possible breach of 25,000 later on. No, the Nifty did not breach 25,000 the other day, as what the Nifty futures were indicating before Wednesday's open. But keep in mind that it's actually on 6 straight days of gains. And so far, we are seeing that sentiment has remained rather robust, actually, out in Mumbai. And we'll see if today is the day where they actually challenge that 25,000 level. The Indian rupee, though, weakening today to about 88.12 against the US dollar. As we mentioned, India is getting a growth forecast upgrade. Fitch Ratings raised its GDP forecast to 6.9% this year, and that's up from 6.5%. The revision comes after a stronger than expected June quarter, where GDP grew 7.8%. Robust services and resilient consumption led the charge for the economy, with Fitch saying domestic demand will stay the main growth driver, though trade tensions with the U.S. still pose risks. Growth is expected to slow in the second half of the year, and the RBI could still cut rates by a further 25 basis points later in 2025. Well, let's talk trade. European Union officials saying the bloc is unlikely to hike tariffs in China and India over their purchases of Russian oil. This comes after U.S. President Trump called on the bloc to consider up to 100% tariffs on the two countries to put pressure on Russia to end the Ukraine war. The timing is also interesting, as India and the EU are holding trade talks right now, and CNBC TV 18's Parikshit Luthra joins us now with more details of those negotiations. Parikshit, you're outside right now. Give us an idea of what you're hearing on the ground, actually, with regards to these talks and how it's happened around the same time when the U.S. is trying to pressure the EU to ramp up tariffs on India and China as well.
Well, there is a lot of activity between India and the European Union right now. As we speak, there are about ambassadors of at least 25 European states who are here in New Delhi for talks on issues related to political alignment, strategic affairs and defense. You also will have talks between Commerce Minister Piyush Goyal, Maros Sefcovic, the EU Trade Commissioner, and also Christoph Hansen, who is the EU Agricultural Commissioner. So very important negotiations. We can tell our viewers that 11 out of 23 chapters in the trade negotiations have been completed, which means that there is some amount of agreement on those chapters. Commerce Minister Piyush Goyal has said that 60 to 65% of the chapters have already been agreed upon, and he's expecting substantial progress this week. Clearly, because of the uncertainty with India-US ties, India is trying to finalize its trade agreements very fast. Having said that, differences still remain when it comes to rules of origin, food safety standards, the carbon border adjustment mechanism, which India has said is a non-tariff barriers. The EU also wants greater access to India's automobile markets. They want tariffs to be almost zero when it comes to exporting cars and auto components from Europe to India. How much will India allow that? That has been a sticking point in the past. That remains to be seen. Alcohol is another area where EU will want great access. So where will the chips finally fall? Where will there be consensus? That remains to be seen. But there is very strong political intent to get this deal done as soon as possible and before the end of this year. When it comes to the Russia-Ukraine war, there will also be pressure from the European Union on India to reduce purchases of Russian oil. Whether India trims that, that remains to be seen. But for the moment, let's listen in to Ursula von der Leyen, the President of the EU Commission.
We need to double down on diversification and on partnerships. 80% of our trade is with countries other than the United States. So we need to capitalize now on these new opportunities. And at a time where the global trading system is crumbling, we're securing the global rules through bilateral agreements like Mexico, like Mercosur, or finalizing negotiations on a historic deal with India by the end of the year.
All right, so that was Ursula von der Leyen speaking about the importance of having trade deals with other nations. And for India as well, the EU is extremely important. There are 6,000 European companies which are present in India. The trade in goods was around $135 billion last year, and EU is India's largest trading bloc. So a lot riding on it. And after EFTA, after UE, after Australia and UK, we would definitely like to have this trade deal in the bag, and it'll be a victory for the Indian side as well. And we need markets to diversify exports in case there is no consensus in that trade deal with the United States.
Yeah, you could also see how clearly spelled out there, Parikshit, is there is a mutual interest from both Brussels and New Delhi to accomplish this trade deal, because there's a lot riding on this and to accomplish this fast. But Parikshit, we're also seeing President Trump taking a somewhat friendly tone towards India in recent times. This also comes, though, as he urges the EU to ramp up tariffs on India. Look, it looks like mixed messaging. It looks like the makings of a bad relationship. Any updates on trade negotiations on that front? Because we're a little bit perplexed about one message going this way and one message going the other way. Are you as perplexed as we are?
Well, it is, of course, confusing for the Indian viewer as well. But I guess it's domestic politics for President Trump. And what we've been told by sources in the government, that it's quite clear that Donald Trump is not completely backtracking from his earlier stand of putting pressure on India to reduce purchases of Russian oil. His priority continues to be to end the Russia-Ukraine war. And while he wants to put the relationship with India on some sort of stable track and not make it look as if this relationship has gone down or they've lost India to China or Russia for that matter, they also want to maintain their stand on the Russia-Ukraine war and how ending the war is a priority. And therefore, the rhetoric on sanctioning India, imposing 100% tariffs on India for purchasing Russian oil or urging EU to do so continues. Having said that, there has been a lot of back-channel communication. We've been told that over the last few weeks, officials at the level of our ambassador in the United States and officials in New Delhi and the White House have been in constant negotiations to bring this relationship to a positive track. At best, what we can say right now, that the India-US trade negotiations, which had been derailed since the 1st of August or ever since the additional penalty tariffs were imposed, is at least back on track. We can now start talking in a positive environment. The intent is to conclude negotiations by the end of this year. Does this mean that the 25% additional penalty tariff will be set aside? There is no clarity on that. Will the reciprocal tariff of 25% be brought down to 10%? No clarity on that front either right now. So that's why the Indian government also remains very, very tentative. They're not celebrating this as a victory or truce for any sort. They say we have to be very, very clear about our stated goals, protecting ourselves in agriculture and dairy, and also making sure that the tariffs are below 15%. That remains the end goal. But we are told that there could be an exchange of trade delegations between India and the United States in the next couple of weeks, which means that a trade delegation will either go from India to the US or from US to India for in-person negotiations. That will be important to watch out for.
And still a lot of steps to accomplish, but at least both sides are talking. We'll see how long this positive climate actually will last. Parikshit Luthra from CNBC TV18, thank you so much for joining us today and providing the latest with regards to the EU-India trade talks. And more on tariffs. Mexico is moving to raise duties on cars from China and several Asian countries to about 50%. This is part of a broad overhaul of import taxes. The Latin American country says this plan is aimed at protecting manufacturing jobs. As part of it, levies on steel, toys, motorcycles, and textiles will also be hiked. The new tariffs will impact about $52 billion worth of imports. We're joined now by Mohan Kumar, who is the former Indian ambassador to France and Bahrain, and more importantly, the former lead negotiator at GATT and the WTO because of all of the flurry of trade talks and trade currents that have developed over the last 48 hours. It's timely to have him join us today from New Delhi to parse through all of this. Mohan, thank you so much for joining us today. I want to start off with the recent turn of developments with regards to the U.S. and India, because we've seen the trade negotiations seem to have deteriorated quite rapidly leading up to August, but this time around it seems that the talks are back on and both sides have expressed intent to try to get to a trade deal. But on the other hand, the U.S. is looking to at least urge other blocs like the EU to raise tariffs on India in a form of pressure. As we mentioned a while ago with Parikshit, this feels like a lot of mixed messaging that leaves us all a bit perplexed. Is this really just part of a negotiation tactic? And I'm leaning on your experience as a negotiator at the WTO. Is this really part of negotiating tactic, or is this just a matter of things being just a bit too scattered right now to make sense of?
Thank you very much for having me. I genuinely think this is part of good cop, bad cop, frankly, and it is mixed messaging, as you say, from the United States. I think the problem that we have is that India prefers backroom deals, quiet diplomacy, and diplomacy behind closed doors, and the United States appears to prefer very public diplomacy and megaphone diplomacy. Having said that, I think India's position has been governed by a strategy which is no confrontation, no capitulation, but yes to conversation. And to me, it seems that is the right strategy to follow. We haven't retaliated to the verbal volley coming out of Washington from Peter Navarro and other guys. So there has been an improvement in climate, as Parikshit said, at the top level. But I'm happy to report conversations never stopped, really, between the two sides. So my assessment is, this is not so much about trade. It is about trade, of course, but it's a lot more. I think we are looking at Russian oil. We are looking at the problem in Ukraine, that President Trump is extremely frustrated by Putin and the fact that he's making no progress on the war in Ukraine. It's also a little bit about personal pique, if you like, by President Trump vis-a-vis India for whatever reason. So I think there is a combination of factors at work. I will also tell you that in all the 30 years I dealt with trade, there has always been an impact on trade from geopolitics and domestic politics, but I have never seen geopolitics and domestic politics drive trade talks like this. This is almost like the only thing that matters is not the dollars and cents, which is vital for trade negotiators like me, but essentially geopolitics, domestic politics. What is the MAGA crowd saying? What will domestic audiences think about? What about the poll ratings? What about the midterm elections? So I really think the politicization of trade negotiations is what we are seeing at this moment.
So do you think it's really geopolitics that's really the main driver for how trade talks have now developed? Or do you think it's still down to the U.S. trying to get more manufacturing back to the country, perhaps making the American economy great again? What are your thoughts? Is this now a geopolitical play mostly?
A combination of both, actually. And there is no question that President Trump wants manufacturing to return to the U.S. I mean, the U.S. wants to maintain its primacy vis-a-vis China, and it feels it's losing out on manufacturing, tech, and innovation. So there is no question that that is what is driving it. But the fact is, geopolitics is playing an important role as well. So if the US has to strike a deal with China, if the US has to strike a deal with Russia on the conflict in Ukraine, the US finds it convenient to use trade. In fact, you will recall that even in the India-Pakistan conflict, President Trump claimed that trade had something to do with it somehow, although the fact of the matter is India and Pakistan trade very little, actually. So I think there is no question that we are looking at an extreme geopoliticization of trade, whichever way you look at it. By the way, I wouldn't just blame the US. If you look at EU and China, they've got tit-for-tat anti-dumping duties or tariff duties on not just electrical vehicles, but also on pig exports, frankly, from EU to China. So China and EU are doing it as well. And you will realize that US, EU, and China are the biggest three trade players in the world. If they are going to go down the route of violating their WTO commitments, MFN commitments, and just impose tariffs the way they want, then I think it augurs badly for the multilateral trading system, which is why I think countries like India, which used to rely on the multilateral trading system, have embarked on a series of FTAs. And that is why, as Parikshit said, we are very, very keen to conclude the FTA with EU so that we can diversify the risk when it comes to our trade relations.
You mentioned Peter Navarro earlier on, Mr. Kumar, and he has been one of the more vociferous critics of India in recent times, even calling you guys the Maharaja of tariffs. But when you look at the fact that some of the things that are key for India, such as protecting the agricultural industry and protecting some other industries, I hate to bring this up and play devil's advocate, but is he completely far off? Is there more for India to give with regards to reducing some of these tariffs that he's claiming are on India's side to create trade more freely?
Firstly, I think the label Maharaja of Tariffs or Tariff King is extremely unfair. I wrote an article for Newsweek in which I broke down the exact applied trade-weighted tariffs, and they are just 4.9%. The exceptions, as you say, are agriculture, dairy, and autos. As far as agriculture is concerned, I would describe India as sui generis, and I would make the point to you that no elected government in India can survive if it completely opens up the agriculture market. 50% of the country depends on agriculture directly or indirectly. It's impossible, frankly, to open up the agriculture market, especially to Western farmers, especially in the United States, who are heavily subsidized by their governments. So I don't think that is possible, and that is a clear red line. Autos is a slightly different story. It's a mass employment provider in India, and we've been having jobless growth for some time. So the sector becomes extremely important for provision of jobs. So ag exports are going to be difficult to accept. In the case of autos, what India can contemplate is some kind of tariff rate quota for the luxury vehicle market. That is something that we can accept. If you're selling BMWs and we are going to sell it above $40,000 or $30,000, that is something that India can contemplate. But all other exports of small compact vehicles will be extremely difficult for India to accept. But as I said earlier, this is not so much about trade. My sense is the trade agreement was done. It's almost done, 99% it's over, which is why President Trump is also expressing confidence that the trade agreement can be concluded. I think the problem lies more with India buying Russian oil and other geopolitical factors. So we just have to wait and see how these things play out. I mean, Russia is under pressure, especially after events yesterday vis-a-vis Poland. So we will see how that plays out, but that will have profound consequences for India.
Well, let's talk about Russian crude then, because you mentioned this is the geopolitical tinge that's also driving all of this, really trying to pressure India to wean itself off of this. But as we've seen before, making sure that energy security and affordable energy continues to support Indian growth and ordinary Indians who are most affected by these prices is something that seems to be a bit of a red line for India at the moment. Do you expect that this will actually result in these higher tariffs? Because again, this is a position that India has shown it's difficult to reverse on, just because it's so important to the energy security question that India faces as it tries to maintain its growth.
I would say this is much less of a red line than agriculture or autos, frankly. As far as oil is concerned, we were given to understand by the previous Biden administration that we should go ahead and buy oil from Russia. Otherwise, there would be an enormous increase in Brent crude, which will impact the global economy. So we went ahead and purchased Russian oil, and that was obviously capped at levels that were accepted by the major players. Now, suddenly to expect India to reverse this and bring it down to zero is well nigh impossible. Energy security is important, but I think what roils most Indians is the fact that we are being discriminated against because European Union buys a lot of gas from Russia, and even the United States buys $3 billion. It's not much. $3 billion is a small amount, but even the US purchases palladium, fertilizer, and uranium from Russia for $3 billion. EU trades with Russia to the extent of 70, $80 billion, and India does to the extent of 85, 90. If you think $90 billion purchases of oil by India will bring the conflict in Ukraine to an end, be my guest. Not going to happen. So I really, for example, China, it buys much more oil from Russia than it does India, but China has gotten off very lightly. So those are the things which actually cause a lot of angst in Delhi. But we are trying to keep our cool and trying to negotiate with United States. We will be happy to diversify our energy purchases in the future, but you will have to give us time. This is not a tap that you can just switch off and switch on. We have been buying oil from Russia, no question about it. I think what needs to be done is there needs to be some international consensus. Just saying we should stop buying Russian oil, will there be an impact on the increase in Brent crude prices? If there is an increase in Brent crude, I don't think President Trump or the United States is going to like it with the midterm elections coming on. And that will impact everybody else in the global economy. So this needs to be managed. But on the whole, I would say agriculture and other items are much more of a red line than this one.
And what's interesting also is that another unintended consequence of these tariffs might be that it's pushed relations between elsewhere adversaries to warmer waters. For instance, the SCO summit, we saw China and India perhaps warming up to each other. Also the sign of President Putin and Prime Minister Modi holding hands there. Is this an unintended consequence perhaps of the tariff push that we're seeing these realignments right now? What are your thoughts, given you are a former ambassador as well, sir?
Probably unintended. The rapprochement with China began in the meeting between Prime Minister Modi and President Xi Jinping in Kazan in October 2024. So it predates the trouble and the challenge that we are having in our relationship with the United States. But I will not conceal from you the fact that the challenge in our relationship with the United States has provided some impetus for India to try and make progress in the reconciliation with China, but I wouldn't exaggerate it. Most people are not aware that India-China border, we still have 50,000 troops on each side, which are staring at each other in eyeball-to-eyeball confrontation. So it's not as if a one hug or a one handshake between Prime Minister Modi and President Xi Jinping will resolve everything between India and China, and suddenly we become excellent friends. I don't think that is correct. Yes, it has got some impetus, but I think we are a long way from normalization of relations between India and China.
Mohan Kumar, former Indian ambassador to France and Bahrain, and the former lead negotiator at the GATT and WTO. So many questions, but so little time, sir. We look forward to the next time you can join us on Inside India to help us better understand all of these trade currents, because, again, things change very quickly at the drop of a hat, and wouldn't be surprised and would be very pleased to see you back on the show in the near future, sir. Appreciate the time again, and thank you so much for joining us. Coming up, India's tariff-hit marine exporters could get a new lifeline. Details on the other side of this break. You're watching Inside India. Welcome back. A quick check now on the U.S. dollar, just seeing where the greenback is heading today, and it is just looking a bit firmer today at 97.83, flat to the upside, as some would say in the markets. We're gearing for a busy central bank week with U.S. inflation data in focus due tonight, Asia time. Analysts expect a 2.9% year-on-year jump in consumer prices, and if so, it will be the highest annual inflation growth since January. But ahead of that, the producer price index that is, fell unexpectedly in August, down 0.1% month on month. Economists polled by Dow Jones had been looking for a 0.3% increase. The monthly decline or sequential decline giving the Fed more reasons to lower rates, it seems, next week. Our colleague stateside caught up with Goldman Sachs CEO David Solomon and asked him about his expectations from the Fed's meeting next week.
I'm pretty confident that we'll have a 25 basis point cut. Whether or not we have a 50 basis point cut, I don't think that's probably in the cards. So I would expect a 25 basis point cut, and I think you could see one or two other cuts, depending on how economic conditions play out from here. But there's no question we're going to see a slight change.
And that softer rupee so far today will also be in focus leading up to the Fed's recent upcoming decision. That is, the rupee currently trading a bit weaker today at 88.14 against the U.S. dollar. It's important to note that its record low was about 88.21, which it tested just last week. So again, we're not exactly off of those record lows, but that will be in focus, and any potential volatility perhaps coming from the Fed's decision if there is a surprise either positive or negative. We are counting down to the broader market open in India also, and this is how we are shaping up right now, with futures flashing once again a possible breach and a convincing breach of that 25,000 mark later on. Can the Nifty 50 actually make it 7 straight days of gains? It remains to be seen, but so far confidence is building, it seems, and we'll see if that does actually manifest when markets open in about 13 minutes. Inflows into India's equity mutual funds slowed in August, dropping 22% from record highs as new U.S. tariffs rattled investors. Data shows many moved into gold, with gold ETF flows hitting a 7th-month high. Mid-caps held steady, but small-cap inflows fell sharply. And overall, domestic flows still helped offset $4 billion in foreign fund outflows. Gold prices near record highs right now. We take a look at the precious metal, though, easing off of some of those record highs. But again, the trajectory is clearly pointing towards the upside. That is, $3,632 per troy ounce is where the precious metal currently sits. And now moving on to some IPO activity. Urban Company's $216 million IPO getting fully subscribed within just 2 hours of the launch. The home services platform drew strong demand, retail investors snapping up their allotment 6 times over. The issue, which closes tomorrow, is targeting a valuation of about $1.7 billion. Urban Company posted profits last year, and analysts say it holds a first-mover advantage in a market with a huge growth potential. We're also focusing on India's exports of marine products. The sector could get a fresh lifeline from the EU after being hit by steep U.S. tariffs. The European Union reportedly clearing 102 new Indian fishery establishments for exports. India's Commerce Ministry claiming seafood exports to the United States, to the EU that is, could see an immediate 20% jump following the move. Remember, India counts the United States as its biggest market in the sector and exported nearly $3 billion worth of seafood in the last fiscal year. Pawan Kumar is the national president of the Seafood Exporters Association of India and joins us today to help us to share with us their sentiments, especially given the rough and tumble last 6 weeks that's really hit the industry and has raised a lot of concerns with this particular space. Pawan, thank you so much for joining us. As you mentioned, there's a lot of trade developments, possible upside and downside, and your sector itself caught in the crosshairs. I want to get a sentiment, though, from you as to what the mood has been like among your association members since the tariffs were announced, and how, if that has impacted businesses already.
Yeah, morning everybody. Yes, when the first tariffs came in the month of April, it started with 26% and it brought down to 10%. The sentiment was weak. Of course, we had a window period of about 90 days where there was a surge in exports. If you see the first quarter, that is April, May, June, there's a surge in exports. There's an increase in exports to the United States. That is because before the other tariffs hit in, people exported a lot of product to the United States. But post July, when the tariffs were increased from 10% to 25%, that has taken a big hit on the industry, followed by a penalty that definitely. Having said that, once the EU good news came in, where most all the units, 100% of the units from India were approved by United European Union. Piyush Goyal has put in his personal effort to make sure all the units were approved. We definitely thank him for that, and that's a positive sentiment.
Positive sentiment indeed, Pawan, but do you think it's going to be enough to offset any particular lost business from the United States if those tariffs remain at that staggering and concerning 50% level, or does more need to be done to help offset the blowback from those possible American tariffs?
See, immediately offsetting the United market, which the India has in the United States, that is not easy. But yes, slowly in the next 6 months, our exporters to find new markets like EU, which has just opened up, and other markets like Russia will probably, I will not say 100% shift from the United States market, will have to be diverted, and our exporters are quite capable, and new markets, open up new markets for us. We should be able to, slowly dependence on US market till as long as the tariffs exist.
Well, we're going to be taking a quick break, but we'll be back with Pawan Kumar, President of the Seafood Exporters Association of India, in just a little bit. You're watching Inside India. Stay tuned and don't go away. And the 10th Annual Belt and Road Summit is underway in Hong Kong, and conversations around tariffs are also front and center there. Elaine Yu joins us with more on this. And Elaine, what are we watching out for as this takes off and goes underway out there?
Yeah, so tariffs, trade, those are certainly top of mind, at least in the backdrop as well. And I got a chance to speak with Anthony Look, the Malaysian Transport Minister, who was here in Hong Kong attending the Belt and Road Summit. And he talked about Malaysia's strategy to maintain neutral in the face of geopolitical tensions between the U.S. and China, and not wanting to get entangled with that. And he talked about maintaining good relations with both countries. And indeed, both the U.S. and China are very important to Malaysia. So Mr. Lok talked about how Malaysia is now stepping up patrols on illegal transshipments to convince the U.S. that it is taking action on that. And it's also attracting a lot of U.S. investments into Malaysia's semiconductor industry. But at the same time, Chinese investments into Malaysia is very important. It's also investing into semiconductor industries, companies in Malaysia, but also into infrastructure projects, the various rails and trains that Malaysia is building with Singapore and within its east coast. So let's take a listen to what he said about Chinese investments into Malaysia.
I think we have adopted a very open approach. We do not confront, but we continue our dialogues. We continue to negotiate, and we did manage to bring down the tariff to 19% for Malaysia. But we will continue to engage the United States. And as mentioned numerous times by our Prime Minister, we want to maintain this neutrality, and we do not want to entangle ourselves with any geopolitical tensions between US and China. But at the same time, we make it very clear that as a sovereign country, we must be able to implement our policies, to have our own positions, to take care of our economy and our people.
I just wanted to ask about the rules that Malaysia is tightening on transshipments. So how effective have those rules been, and do you foresee any challenges in enforcing that?
We are, of course, we are giving the cooperation in terms of enforcement. Any illegal transshipment within our waters will definitely be acted upon, and we will definitely enforce our law and to make sure that those are not happening within our waters. So this is something which we are beefing up in terms of our patrol, in terms of our enforcement. And I think that so far we have been able to convince the United States that we are taking actions on the concerns that they raise.
And indeed, localization is a very important topic when many countries look at Chinese investments. But since the minister brought up the fact that the topic of tech transfers were discussed during bilateral meetings between China and Malaysia last week in Beijing, so I asked for a bit more color about how he described the Chinese side being more sincere about facilitating that tech transfer now, and sort of what is the motivation for the Chinese government here. And he said that, of course, every country wants to protect its IP, but he said that Beijing is understanding how it is important for China to lift up the status of other developing nations. And that just reminds me of how President Xi Jinping last week at the SCO summit has been sort of casting China as a representative or playing a leading role in shaping sort of the rise of the global south and Xi's multipolar vision here. And indeed, if it wants to step up into that role, it may have to share some of that manufacturing prowess with other countries, especially developing nations, JP.
Now, Elaine, that's also interesting because if I recall, and correct me if I'm wrong, you actually had an interesting report just just recently about India and China's own trade relations, actually, and also how tech transfers were also a key part or a key sticking point there as India wants to move up that value chain with regard to manufacturing and perhaps looking towards perhaps weaning itself off of some of these key import components from China. Again, are there any parallels that you're drawing between what you're seeing with what you heard from the transport minister with regards to China and Malaysia and, say, China and India right now?
Yeah, because India isn't part of this Belt and Road Initiative, whereas a lot of Southeast Asian countries, and including Malaysia, is. But there are definitely parallels when it comes to part of being China plus one, right? All the countries and Malaysia, Southeast Asia, Vietnam, these has been the prime examples of that. And analysts have sort of pointed out that India hasn't benefited as much from that. But if you look at the iPhone, for example, it does have been bringing that manufacturing into India a bit more. But analysts have pointed out that the domestic value add isn't really that big for iPhones. And there is a saying that the India's Make in India campaign does rely on made in China because it sources so many components, whether it's iPhones or its pharmaceutical industry that India is very well known for. And it is wanting that tech transfer as well. So although India isn't part of Belt and Road, we'll be looking at if we're seeing that tech transfers into a country like India, sort of warming ties, but also a sort of competitor to China, JP.
Interesting to see all the parallels that are developing, especially in the silence of the latest discussions that are related to the Belt and Road initiatives, that is. Elaine Yu, thank you so much for joining us and providing us context and the latest updates regarding that. We're back with Pawan Kumar, the national president of the Seafood Export Association of India, and it's not just manufacturing in India that might get hit. As we mentioned, the seafood exporters also are facing a lot of risks from these tariffs. We know how big, or we've learned in the last couple of weeks, how big the shrimping industry is in India, and the fish and the seafood industry, that is. But I want to know how many people are employed across this particular sector, Pawan, and how many jobs might be at risk if the tariffs stay at these particular levels?
See, across the country, directly and indirectly, there are about 28 million people working in the seafood sector, including their allied sectors in the seafood. Impact on jobs, it is too early to talk about it. But as an exporters association and an exporter myself, I'm trying to make sure, that none of the jobs are lost. We are trying to, secure new markets, so that the product keeps going into those markets. Yes, there is going to be a temporary setback, but we will make sure it doesn't have a long-term impact on the workforce, at least for the time being. And we are pretty sure these things will be sorted out very very quickly between both the governments. I'm sure both of them are aware of how important both the markets are for each other, and we are hopeful that there'll be an early solution for this.
Pawan, I want to talk scenarios right now because one of the sticking points here is try to get that tariff level, that threatened tariff level of 50% down. They did say the reciprocal tariff was originally at 25%. Is this a level that the seafood exporters and the shrimpers of India are comfortable with, 25%? Or is this still going to put a lot of exporters at risk or even, dare I say, peril?
Yes, you rightly said, even if the tariffs come down to 25%, we have a level playing field with our other competitors like Ecuador, Indonesia, and Vietnam, because Ecuador is about 15%, Indonesia is about 19%, and even if India gets down to 25%, I think we are almost at the level playing field, and we will keep our market share in the US as the largest exporter of shrimp to the US market. That could be the 25% could be a comfortable level. I don't say comfortable level, but at least we are on a level playing field with other exporting countries.
Still at 25%, though, you'll still face higher exports than some of the other major shrimpers. I'm thinking about Ecuador, for instance, Vietnam at 20%, and China currently at what they call a tariff timeout. If it is at 25% and the tariff differential is at that particular level, how much market share might be lost with regards to Indian shrimpers? And I'm just looking for a worst case scenario, not trying to pile on here. Just what might be lost if the tariffs come down to 25%, which are still higher than the likes of Vietnam or, say, even Ecuador, sir?
See, if it is 25%, we don't think we will lose any of the market share, maybe in a single digit. And I'm sure even that also will try and make it up. There could not be a major shift if it is 25%, because the kind of product and the quality of product what India can give in the seafood sector, I'm sure our competitors may not be able to match. And see, India has developed that market over the US market over the last 20 years. And the buyers also at 25%, probably they'll come back and buy from us. Yes, there will be a drop, but I don't think a substantial drop will be possible.
Okay. One thing that was also announced recently, Pawan, is that the government is preparing relief packages for exporters. And I'd like to assume that the seafood exporters of India and the shrimpers of India are among those that will receive some of these relief packages. You've probably looked through the proposed relief packages to help cushion you against these possible tariff issues. Is it going to be enough to make sure that you can survive this tariff storm?
See, the relief package, yes, because the government is very sensitive towards the industry. They understand this is more of a labor-intensive business. Government is coming out with some sort of a relief package. More than relief package, we feel the tariff should come down to 25%, at least 25%, if not lower, for things to get back to normal. Yeah, relief package is a welcome move. We look forward for that.
How easy or difficult is it going to be to pivot towards other markets, since you did bring up that right now the goal or the impetus is to try to diversify into new markets to offset this? How easy or difficult is that actually, given the nature of your business, sir?
I will not say it is going to be easy, because see, when you start a business with the buyer, it takes some time. It takes 3 months, 6 months, or 9 months for the confidence to develop between the buyer and seller. So that process is something which we have to go through again. And today we understood that we have to look at other markets and make sure we nourish and develop other markets also. Because looking at the prevailing uncertainties in the US market, it would take some time. I think the government is coming out with the relief package, keeping that in mind, because a helping hand on both the sides. Because we have to give a helping hand to the farmer to make sure he doesn't suffer, and the government is making sure the exporter doesn't suffer, so that helping hand is coming in from the government very shortly. And it will take some time. It will take 6 months to a year for us to develop and increase our market share in other markets in the US.
Pawan, you also probably heard that once again the trade talks between India and the U.S. went from good to bad, and now it seems that both sides have confirmed that they do want to get to a trade deal or a trade agreement. Does talk or news or hearing that perhaps both sides are starting to at least starting to come back to the negotiating table, does that give the seafood exporters a bit more comfort, or is there still a lot of tension right now among your members with regards to the uncertainty?
Tension is, as you rightly said, a little bit of worry is there. When we hear that news that they're coming back to the negotiation table, it's always welcome. We're looking forward for that. And that's the reason when I made my opening statement, I said this should be sorted out very quickly, because both the governments are mature government. They understand the importance of trade and other things. And I'm sure when we get a news that they're coming back to the negotiation table, there's no better news than that.
And Pawan, just very quickly, what other measures can the Seafood Exporter Association of India and some of your members perhaps do to try and mitigate the impact of these tariffs? Because these seem to be outside of your control, but what can be done, if there's anything at all that can be done, to try and at least make sure that things are cushioned? What's in your hands to try to make sure you can mitigate these?
There are a couple of things. One, markets, the new markets. For example, EU has just opened up for us. UK, we have signed a trade deal with UK last month. And then we have the Russian market, which can be quickly opened up. The Commerce Ministry is well aware of that. They are working towards that. Japanese market is one market which we are slowly and trying to expand our footprints in that market. And there are other markets, Middle Eastern markets, which can be opened up. So that, even if this tariff issue takes a little bit longer to be resolved, we still have the markets open for all our exporters.
Pawan Kumar from the Seafood Exporters. Sorry, sir, please finish your thought.
And of course, the helping hand which the government is proposing, that also will help us in the process of finding new markets and making sure, the impact is not much.
So a lot will be contingent on whether or not those tariffs can come down to 25%, how quickly new markets can be found. Pawan Kumar from the Seafood Export Association of India, I appreciate your thoughts and for being candid with us as to how this is impacting your very critical industry and the many members that are part of your association. All the best, sir, and we hope that things do turn better for the Seafood Exporters Association of India and that very important industry. Well, Indian markets, you mentioned, are online, and the Nifty 50 has now crossed 25,000 5,000, it seems, is right there, trying at least to make sure that it can stay on that particular level. But a 10th% increase intraday has been enough for it to actually try and test that level after days of forecasting that it could breach that right now. The Indian rupee is looking a bit weaker, though, today at about 88.13 against the U.S. dollar. But overall, it seems that the optimism continues for India's equity markets. A quick check on bond yields now, and as we wait for that to come on, you're seeing here that the Indian bond yields are currently looking a bit unchanged, at least on the shorter end of the yield curve. But the 10-year bond yield now coming down a little bit, down by about 0.1%, 6.474% is where it is sitting right now. India's market regulator is making it easier for foreign investors to buy the country's government bonds. SEBI says from February 2026, investors who focus only on government securities will not need to disclose their group details, since these bonds are considered low risk. The move comes as foreign flows into Indian debt surge, following their inclusion in global indices like JP Morgan and the FTSE Russell. Meantime, shares of Infosys in focus today as the company's board convenes to discuss a share buyback. Infosys' last buyback was in 2022 when it approved 93 billion rupees in the program, paying up to 1,850 rupees per share. And investors will be watching to see if this move boosts shareholder value. Currently, though, we're seeing that its stock is down about 1% intraday to 1,517 rupees apiece. And it seems that's all the time we have today on Inside India, but please do keep watching CNBC. Access Middle East is coming up next. Good morning.